Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, president of Universal Accounting Center, and this is a podcast dedicated to helping owners of accounting, bookkeeping, and tax businesses basically offer quality accounting services and get paid what they're worth. Why? Because you're doing the things that are right, hearing from the experts and learning what it is you need to be doing to be the leader that you need to be in your business to have the premier accounting firm in your area. Now, each and every week we have on the episode guests, experts in their own right as to what it is that they need to be doing. And today's going to be no exception. I'm excited for today's episode. It's a returning guest. It's Mark Wickersham. Mark is a chartered accountant, public speaker, and author. He is known as the most sought-after profit improvement expert in the accounting community. Mark is also a widely published author on practice issues. In May of 2011, his first book, Effective Pricing for Accountants, was a #1 Amazon bestseller. His sixth book, Value Pricing for Accounting Professionals, was published by Krogan Page in 2022. He's actually on the short list of AccountWeb Outstanding Contributions to Accounting Award. So this is just another great treat. Mark, welcome to the show.
Well, Roger, thank you so much for asking me back, and thank you for such a great introduction.
Well, I think one of the things that I enjoy about our conversations is we get to the heart of the matter. It's the value of what it is that accounting professionals should be getting paid for the work that we do. We work so hard. We do all this great work. Are we being fairly compensated? And I really think you just kind of hit on one of the topical things that we all need to consider. So this is always a great conversation, but I want to kind of go back to the beginning, give my listeners a little bit of context. Share with us your start, how you started your accounting practice, and maybe you can share what you would do differently if you could.
Yeah, sure, Roger. Well, I started back in May 1996. Yes, I am that old. Yeah, wow. And I made so many mistakes. I did everything wrong. I would do everything different again if I started again. I started out thinking that I started out thinking that just because I was good at doing the technical work, I came from a tax background, just because I was good at doing taxes, that I would build a successful accounting firm. But the things I would do different were, number one, the first thing I would do different starting again is actually think long and hard about strategy. I would think about my pricing strategy. I'd think about marketing strategy. I'd think about what are the right clients to take on, because I didn't think of any of that. I thought it was all about winning as many clients as possible. Taking on anybody would do. And I grew crazy fast. I grew from 0 to 200 clients in under 3 years. I thought I was doing a great job. I grew a team of people fast, but I was struggling. I was in a mess back in late 1998, 2.5 years into my practice. My life was a bit of a mess because I'd been doing everything wrong. So the first thing I would do different is definitely get the strategy right from day one. And then the second thing that I would do, there's three things. The second thing I do is definitely get the pricing right, because pricing is the most important thing to get right in an accounting firm. I was pricing based on the hour because I thought that's what you had to do. I was pricing too cheap because I didn't like that negative reaction that, that's a bit expensive reaction. So I went in cheap to win the business, thinking that was a great strategy. And it was a stupid strategy looking back. And number three, I would also put in the right marketing foundations. I didn't really understand marketing and make sure I took on the right people. So yes, I do things very, very differently if I started again.
All right. So I want to dive into a few of these things. First of all, you ended with marketing as being something you do differently. I think most people would beg to differ. You obviously grew in those 2 years phenomenally well. You grew the business quite well and quickly. So I have to ask, with that amount of growth and success getting clients, what is it about the marketing you would do differently? So let's start there.
Yeah, good question. That's an interesting one. I think it really comes back to the strategy, the right marketing strategy. So the way I teach strategy and marketing strategy particularly is, I think we're in danger of overcomplicating things. But really there's 3 simple steps to marketing strategy. And they are so, so important. Number one is it's identifying who is your ideal client. Mm-hmm. Which is a concept I'd never come across for several years. I just took on anybody. But I see over and over and over again, accounting firms that are focusing on their ideal client are getting much, much better results. And so that's the first step, and being really, really clear on the ideal client. Second thing to do then is then having got that clarity of who is the right client, the second thing is, what is it that those ideal clients want? Because we try to please everybody. And what we really should do is identify, well, what are the biggest challenges, the pain points facing the people that are our ideal client? Because the better we understand them, the better our marketing will be, the messaging will be. And then number 3 is, once we know what their biggest pain points are, their biggest challenges, how can we build a service offering that's different to anybody else, that's designed to solve those specific problems? Whereas what we tend to do, just like taking on any client, we think, let's just offer everything. We'll offer bookkeeping, cash flow forecasting, payroll, tax returns. We'll just do the lot because there's bound to be somebody that will buy that thing. And before we know it, we're just working crazy busy, doing everything, working too hard, and struggling to make ends meet. So that's, I think, really the key to marketing, is getting the strategy right. And then everything really follows on from that. It's about putting the marketing systems in place, and it's about the messaging, the right messaging, building up your expertise, building up your expert positioning, people seeing you as being the expert in your thing, which is difficult to do if you do everything. If you do everything, you're not the expert in anything. You're the jack of all trades, as we say in the UK. We have to be really focused, and then we build our marketing around that focus.
Yeah, you've touched on so many things. I want to back up a little bit here and hit each of
Sure.
these. First of all, the 3 things that you mentioned, we need to have an avatar or a specific definition of who our ideal client is. I think that's valuable because initially when you start taking on clients, it's very common. You take on anybody and everybody. But as you mentioned, we need to be very particular as to who do we like working with and what is it that we like about those client relationships. And if you like a specific personality type, a certain industry, if you like doing certain work, all of a sudden it becomes more clear what you want more of. And so I think it's very important that we start paying attention to what is it that we're enjoying doing and where is it that we feel appreciated. All of a sudden, then with that clarity, we can then be more deliberate in our marketing to get more of those same types of clients and hopefully in time get rid of the ones that we no longer prefer. The second thing that you brought up is the fact that we need to listen to our clients and not so much worry about what we like and what we think they should appreciate, but we really need to identify what is it they value and are willing to pay for. So we need to listen to our clients. What is it that we're doing that they are happy to pay for and get done? And all of a sudden, that helps us clarify our messaging so that we know what should we be telling everybody else we do that our clients currently really appreciate and value. The third thing that you really dived into there was the fact that we need to be very good at defining then our unique selling proposition. What makes us stand out? And that gets into the idea of niching, becoming an expert, all those things. Because once we're that authority, all of a sudden we become that go-to service in that space because we are the authority, we are the expert, we are that one that those industries or businesses should be working with. We're the ones that they want to actually have access to. So I liked how you broke that down. So I'm going to beg the question now, could you define in your own words what the difference between marketing is versus selling?
I can, and I'm going to steal it off my good friend Steve Pipe, who I worked with for many years running AVN in the UK. And he described it as essentially this. In the accounting profession, we win clients. We win clients via a meeting. We meet with people. And essentially, every activity that we do that leads up to somebody wanting a meeting with us is marketing. Everything that happens in and beyond that meeting is selling. We do the marketing to get them in the room, to talk to them, and then we have the selling is how we structure the meeting itself and all of the follow-up.
Very good, very good. Mine's a little different. There's similarities there. I say the marketing is everything we do to actually get the client, the potential client, to raise their hand and self-identify that they may be somebody that's interested in our services. Once we've gotten their contact information, the selling, I feel, is that nurturing process that leads to, as you're describing, that meeting where we're able to then explain our services and hopefully get the engagement. So very similar, some overlap there, but I like your definition. It's very clear. The selling begins the moment we're meeting with them and talking to them. So that's very important. The next thing I wanted to ask is, here we are at this point that we get them as a client, and it inevitably brings us to this whole pricing discussion, which you're quite passionate about as am I. One of the telltale indications that I find shows that a business is not priced well or charging enough for their services is when they do the work for the client, they're lamenting or trying to push off. They're trying to avoid the work. If you've got clients that you're avoiding the work, you don't want to do it, you're not excited about it, you're not getting paid enough for it. And that's one of the telltale indications of my assessing whether or not somebody's getting paid enough. How do you determine whether or not the pricing that they're earning is right? And how would you suggest people address this whole pricing conversation?
Yeah, interesting. Well, firstly, the first part of that question, how will you know your pricing's right? Your pricing will never be right. Your pricing will never be right. There's no exact science. There's no formula for value pricing. Pricing is a feeling. And
thank you.
with pricing, there's always going to be a better price. There's always a better price that you could get. You will never get the very best price with a client. Value pricing takes a long time. I'm still learning it. I've been teaching it for 20 odd years now, and I'm still learning about value pricing because there are so many elements to it. So it's all about keep testing new things and getting better prices. And also, there's no such thing as the right price anyway, because price should be continually changing. It should be changing. A big mistake we make in the profession is we set our price, the client pays us either annually or monthly, and then we just, particularly if we've got recurring payments in, we just let it roll on and on and on. And the longer we leave it, the harder the price conversation becomes. And what we have to do is keep changing the price as an absolute minimum, at least once a year, because of this thing that's called inflation that's quite bad at the moment. We should increase price every single year, but actually we should increase it even more frequently because circumstances change, scope changes. There are so many things that change. And so we have to manage expectations right up front. At the start of the relationship with the client, we have to be upfront about the way we price, be transparent, and explain why prices change. And it's for reasons that everybody would be, it makes perfect sense. It's fair. If for example, you're pricing payroll and you agree a price for a client who's got 10 employees, 10 payrolls to run, then if they take on 2 more people, then it makes sense that the payroll fee should go up because there's more scope. But equally, we should say to the client, of course, if you lay some people off and you only have 8 people, then we'll reduce the price. And no client can argue that's not fair. Hopefully, most of the time, our clients are growing. And so that means we're putting the price up continually as the scope changes, as they grow, more transactions, more people to pay, and so on.
So there's a few things that you touched on there that I think are hugely important. One, you started with the fact that there isn't an exact science to pricing. I appreciate you bringing that up because I think because of our accounting nature, we think of exactness. And so we're thinking that there's this specific price point that we ought to be charging that is either industry specific or whatever, when in reality, there's that arbitrary element to it. And I think that's important to, first of all, recognize. Second, I think you're right. We're always going to be underpricing because ideally, we should have people that say no. We shouldn't get 100% of the engagement offers that we're extending out there. And some of that should be a contingent on the price may be too much. Well, that means that we're charging well because we're not getting everything. The other thing that I thought we were very important to point out is the fact that they should change on a regular basis. Whenever we don't adjust our pricing, the longer we go, like you said, it makes it more difficult to have that conversation. But if we're regularly increasing, such as you mentioned, a yearly basis, that's just the thing of doing business. And it's great advice for our clients to do as well. So this is all wonderful information. I'm glad we're bringing it up. I want to go back to the word value pricing, though. In my conversations, I speak and teach of 5. The basic ones that everyone's familiar with perhaps are hourly, flat rate, menu pricing, revenue-based pricing, and then value pricing. So whether or not you subscribe to that same philosophy, could you describe value pricing and how you articulate it to people that are considering it?
Yeah, I think it's actually a little bit simpler than that, in as much as there really are, when we drill it down, just 2 ways to price. One is cost plus pricing and one is value pricing. Cost plus pricing is where we add up the costs of producing a product or a service, add on our profit margin, and magically there's our price. It has no bearing to what customers value or demand, but nevertheless, that's what we do. And time-based billing is a form of that. Value pricing starts with the other way around. It starts with value. What's the value that we're creating? What's the value? How are we going to communicate that? And then we set the price accordingly. Costs are irrelevant when it comes to value pricing. So you mentioned a few other things there which were really interesting, like menu pricing, flat fees, and those are what I would describe as pricing models. They are different ways of coming up with a price, and there are dozens and dozens of pricing models. There's also contingent pricing, percentage pricing, dynamic pricing, demand-based pricing. The list goes on. But essentially, all these pricing models are ways of coming up with a price, and all of the pricing models are either a form of cost-plus pricing. Time-based billing is cost-plus pricing, or they're a form of value pricing, or sometimes they're a hybrid. They're a bit of both. And so you mentioned menu pricing, which is interesting, because menu pricing I always describe as the first step to value pricing. It's the best place for people to start on the journey of value pricing. But does that mean that menu pricing is pure value pricing? Not necessarily. It does, in as much as what happens is when you present your three options, the client will choose the package that they perceive in their mind is the one that's of most value. So there isn't a value judgment taking place when you give people choices. Whether it's pure value pricing depends partly, though, on how you come up with the prices. If you've come up with all your prices for three options by looking at the timesheets and working out the cost of each of them, then we're really in a hybrid situation where it's a little bit cost plus pricing because we're using cost as the foundation for building up the price, but then we're giving people a choice so they choose based on their value perception. What we should be doing is using menu pricing to price based on value. And that's one of the things I teach people when they're first moving from cost plus pricing, whether that's hourly rates, fixed pricing. The first thing I teach is menu pricing because it's a great way to bridge the gap from one to the other.
Yeah, I would agree with you. As I've actually worked with individuals to move into value pricing, you're right. The typical best place to start is that menu pricing because it gets them into the mindset of what are the benefits that the client's receiving for the work done, and it allows them to transition into those deliverables and that value add. And once you start getting into those conversations about deliverables, value add, what the perception of the client is, all of a sudden you can move further into that value pricing element. And the way I've defined myself value pricing is rather than fixating on the work that's being done, what we do is we have a lengthy conversation about what the client's going to receive, what's the deliverable in the end. And it all comes back to either savings, what are we going to save the client, a financial gain that we're expecting, or what are the potential upsides in revenue being produced. And if we can identify a dollar amount as it relates to savings or the value as to the ROI, all of a sudden those dollar amounts help us assess, well, if I could give you this $50,000, $100,000, $1 million in savings or revenue, would you be happy to pay me for $1 million, $100,000? Regardless of what it takes time and effort, just the know-how to make the needle move and get that. Are you willing to give me the 100,000 to make that happen? Great, I'll take the 100,000. It's irrelevant the time that it's taking on my part with my team to make that possible. And so all of a sudden that value pricing becomes a lot more relevant. What would you add to that?
I absolutely agree. It's a great point that I said earlier that costs are irrelevant. And that when we are value pricing, we are pricing based on the value. Now, the challenge, of course, is that value itself is subjective. You can't touch it, you can't feel it, you can't measure it. But nevertheless, we should use numbers wherever we can. And those numbers will help us to come up with the prices. And also those numbers will help us to communicate the value that we're providing. So an example I often give is if you think about, let's say there's two clients, client A, client B, and there's a particular tax strategy that suddenly appears. There's a new rule comes in. There's a potential for people in a particular situation, they could save some tax. And you crunch the numbers for client A and client B. And for client A, you can save them $10,000. For client B, they're a bigger company. They've got some slightly different circumstances, and you can actually save them $100,000. So how much do you price the two clients? Now, timesheets and cost plus pricing, we would say that we price them the same. But client B is getting 10 times the value And if client B is willing to pay 10 times the price because we've communicated the value, then why shouldn't we charge 10 times the price if the client's happy with that price? And what that then does, and here's the interesting thing, is that some people say, yeah, but if I can save someone $100,000 and I charge them, for argument's sake, 25%, let's say I charge $25,000, but it's only going to take me a few hours to do the planning. Well, that's because it's not that time there. It's everything that's led up to that point, the research that you've done, the expertise, your experience has done that. And so we have to factor that in. It's not just the time that goes on the timesheet, and we shouldn't keep timesheets, but it's not just the time on the project, it's the time of all of our learning experience. And when we recognize that and recognize that actually it is fair to charge $25,000 to save someone $100,000, even though it only takes a few hours, what then happens is when we switch to value pricing, our focus changes. Because when we know that we can make super profits, bigger fees when we create more value, our focus then becomes, okay, so how can I create even more value for my clients? Because we create a win-win situation. And if we know that we can create more value by doing certain things that are more valuable work, then that's better for our clients. We uncover new ways that we can help them that's more valuable, and we get better rewarded. So that we're on this, when we value price, we're on the same side of the table. We both want the same things. It's a fairer way of pricing because the client wants more value. And when we deliver more value, A, it's the right thing to do. It's the professional thing to do. And secondly, we earn more money.
Well, the thing that I would like to just first of all do is thank you for the illustration you provided, because that exactly proves the point. And what it does is it helps us actually have more self-worth, because we recognize how much time we have in our background, our experience, our expertise, our certifications, all of these things that make up who we are, that lead us to have that self-confidence. All of a sudden, we now have a self-worth to ask and, dare say, demand a higher price point for these services that we're delivering when we're providing that value that you're describing. So I love this, and that illustration of the two clients equally getting the same type of service, but getting different returns or end all expectations. That's beautiful. So here's the next thing that I wanted to kind of bring up. How do you feel seeing accounting professionals implement this has changed their lives professionally and personally? I know you and I have actually seen people who have heard, implemented, and really experienced the benefits of changing their business model to incorporate these philosophies. How have you seen this actually change their lives?
Oh, in huge ways. There are. What I tend to find is that the people that come to me, the accountants and the bookkeepers and the tax experts, they usually their biggest problem is they tell me they are working crazy long hours and struggling to make ends meet, which resonates with me because that was exactly me in 1998. I was working so many hours in my accounting firm and I wasn't making money. I was making enough money to meet the payroll. I was as I grew and got more busy, I just hired more people and then just inflated my fixed cost in my firm. So I had to work harder and harder to then pay the salary bills. And a lot of people, and I know I'm not alone there, a lot of people I speak to are in exactly that situation. A lot of the profession works crazy hours for not enough money. And the root cause of that is the wrong pricing. And some of the stories I've seen over the last couple of decades are extraordinary, of firms doing amazing things. I remember talking to, you probably know the name, Teresa Slack over in Canada. She's an extraordinary bookkeeper. When she started working, her and her sister, they had a bunch of part-time employees, and they told me the same story that I had, which was that they were working so hard just to pay the payroll, and they weren't making any money for themselves. And so the first thing that I helped them with was, the first thing you should always start is, let's reprice your existing clients. You are too cheap right now. And a lot of people dabble at value pricing. Oh, well, I'll do it for new clients that come along. Well, that's okay, but you've got this huge client base right now that you are driving yourself mad trying to find enough hours in a day to service them because you're not charging enough. You have to deal with that first. You have to deal with it. And it might be uncomfortable, but we have to figure out how to do it. And I remember talking to Teresa about this. And one of the things I always explain to people is that you must put your prices up with your existing clients. And you may lose some clients. And the way I explained it was, let's imagine, for argument's sake, that you put your price up by 20% on average across your client base. And let's imagine as a result that 1 in 5 leave. Well, that's great. If 1 in 5 leave, the maths works out that you're still making the same amount of money, but you're now working 4 days a week, not 5. You've now freed up the time that you need to put other things in place, to put pricing systems in place, to start looking for the right types of clients. Anybody that's too busy needs to start off by losing clients. So, and Teresa was one of my perfect stories, because she did exactly that. Got extraordinary results from that. She went back to, they really downsized, and it became, I think, her and Connie, just the two of them for a while. Now, I spoke to her just the other day. They're so much more profitable. They've now got 8 people working for them. And they're not struggling to make ends meet, because they've now got the pricing right, the right clients, not as many clients. And I'm seeing so many stories of that, of people saying that, life is much easier now. I don't have as many clients. I have the great clients. What I don't have is those clients that I don't like working with. And I remember that there were a number of times in my early days of my practice, I'd have in my diary, in the calendar, would be a meeting with a client next week. And it's a client I thought, they always complain, they always moan, I don't like talking to them. And what I'd find is, for the week leading up to that, it would be on the back of my mind, just bringing me down, draining my energy, because I knew I'd have to talk to this person at some point that I don't like. And I had lots of clients like that. And life's too short. Life's too short. We should only work with people we love to work with.
Amen to that. I couldn't agree more. Yeah, the whole idea of taking 5 clients, raising the prices, and with the 4 remaining clients as the one leaves, make as much, if not more, than when you did with the 5. Excellent illustration of how this can be so beneficial, because now you're making as much, if not more, working with fewer people. Beautiful illustration, and so true. And with regards to all of this, I agree. It's life-changing. A lot of people find that this is finally the freedom that they're looking for in their business, because they feel like they're now actually getting paid what they're worth. And that's one of the things that I highly recommend. I do have a question for you. You and I are quite involved with accounting businesses, helping them out. Is there a particular challenge or dare say you like a threat to the accounting profession going on? A lot of people bring up AI, GPT, Bard, all these different things, how the different accounting tech stack tools are now starting to incorporate AI. What are your thoughts regarding all of this?
Yeah, I think there's a big change taking place right now, and I think that November 2022 was, I think, the most significant event that's taken place in the world for some time. And there's been this talk for many years, since back in the 1990s. I remember when I was in my accounting firm, going along and hearing in 1999 Paul Dunn at the Accountants Bootcamp talking about how we need to start adding more value and doing advisory work. And everybody came away from that with this, yes, we're going to be business advisors, we're going to do great stuff. And then we get back to the office and it's full of our in trays full of tax returns have to be completed and end of year financial statements. And before we knew it, we were just back to doing the same old stuff. And for 20 odd years, a lot of people said the boot camp was great, but I never did anything. And that's because there wasn't enough pain. That you've been able to make enough money out of compliance work. It wasn't essential to move. Now, I think things started to change with the introduction of cloud accounting. And a lot of people said that cloud accounting will mean that compliance work will start to disappear. And that's not happened. And a lot of people are saying, oh, compliance work will always be around to stay forever. And I think that's changed now as of November, because November was when OpenAI released ChatGPT 3.5. And that has completely, the last 6 months has been extraordinary, the things that are going on in the world. The changes in AI, in large language models, in the way that the things that it can now do. We've seen a lot of the headlines around, for example, in the US, surveys reported that something like 300 million jobs might disappear. And one of the reasons why people like Sam Altman, one of the founders of OpenAI, was in Congress a month or so ago, arguing that the US needs to build in more safety nets and security around this, is one of the big reasons is that so many people's jobs could go so quickly that society won't be able to adjust to it. And if people say to me, people always need people doing bookkeeping and payroll and tax returns and stuff because ChatGPT can't do maths and stuff like that. Well, you just need to see the way that things are changing right now, and it's incredible the speed of change. Just a few days ago, ChatGPT introduced its own plugin that can do extremely complex maths. I was using it to play around with. Could you feed it an Excel spreadsheet and get it to do analysis and do things like summaries of how much spend per customer, for example, and it does it lightning fast, can do graphs and charts and all sorts of stuff to go with it. And what I'm finding is that because I spend every day using it and following AI at the moment, what I'm finding is that every single week there's something new coming along that 5 years ago would be every single year. The speed of change is extraordinary. And I think as a profession, we have to be aware of this because it's going to have a big impact in the next 2 or 3 years.
So with regards to the accounting profession, what should we do? What are your thoughts?
Well, one of the first things we must do is we must be aware of the changing landscape. We must become experts in AI and ChatGPT, partly to use it ourselves. And I'm one of these optimists. I think today, this year, now is the most exciting time to be in the accounting profession because you can do extraordinary things. I teach accountants, for example, how to do business advisory work. And some people do it really well, but many struggle because when I teach them things like how to come up with a strategic plan for a client, they don't really know how to do it. They don't know the questions to ask the client. Well, one of the things that ChatGPT is extraordinary at is coming up with strategies, with business planning. I did a 3-day event, a conference a little while back, and I showed people how they could, armed with a few of the right prompts, create a 50-page research report for a real-life business full of hundreds of high-quality strategies, and the sort of report that a big consulting company like McKinsey's would charge clients 6-figure sums, if not 7-figure sums. That report was actually done by my daughter, who'd finished university a few weeks back, and I just gave her the prompts to do, and she just followed the system I created, cut and pasted the answers into a research report, tidied it up, and created this 50-page report that you could sell for $100,000 or more with the right clients. It's just extraordinary what it can do, and opens up, I think, so many opportunities for our profession.
So what you've shared there, I'd like to actually kind of summarize into 3 things that I'm witnessing, and I'll share how I'm seeing how AI is actually impacting accounting and see what you think of it. The first thing is if you're not using chat or AI or one of these interfaces, you really need to, whether it be Bard or some of these other third-party platforms, you need to get in and actually experience the conversation with the AI. And it's basically what's called a prompt, as you've said. You write a question and you have this exchange, this interaction with the computer. And honestly, it's a pretty insightful, engaging conversation. If you've actually taken the time to do it, it's pretty impressive, the intellect that the computer is able to draw from and actually have as a conversation. And you just go back and forth with these various prompts and you go deeper and deeper and get more exact information. But the thing that you first need to recognize is that the quality of the prompt determines the quality of the answer. And so you have to be very good and deliberate with the prompts that are being written. Well, that's a big ask of accounting professionals. You mentioned that you've actually pre-written a number of these prompts to help actually through the process as they're doing work. And that's phenomenal because I think that's the first thing is whether you become a great prompt writer or you basically get, as you've described it, pre-written prompts to leverage the AI, there's nothing to be said about it. The prompts are the essence of it. The computer doesn't just volunteer information. You've got to ask a question. The second thing that I would add is the fact that I do believe that all these platforms, the different tools that we as accounting professionals use, the various accounting softwares and plugins, they're going to actually look at integrating the various AI interfaces for us. And they're going to put them into the interfaces for us to tap into, use, leverage, and so forth in behalf of our clients. And that's going to be really wonderful. But here's where I think our saving grace is as an accounting profession, why we're not going to be going anywhere. Even though these things can be systematized and in many ways automated, the client is still going to be leaning on us as an accounting professional to integrate these things into their business model and to help them know which they should be utilizing. But the big thing that's going to be the telltale for us, that's the saving grace, is the fact that our clients aren't just going to act because the computer said to do something. That report that you indicated that we can provide wealth of information in there. But where we're going to have value to our clients is our ability to do, as you just mentioned, the advisory work. Go in, hold them accountable, and help them of the hundred or thousands of actionable things that they could be doing in their business, identify the right 2 or 3 that they have control over and that they can actually implement and have results with. So that's kind of my thinking as to how this all relates. How would you see how the accounting profession leverages this? How do you feel that we remain relevant, in other words?
Yeah, I agree. I think this whole question about AI will replace us, a number of people have said, and I agree, that it's not going to be AI that replaces us. It's going to be how our competitors use AI that will replace us. So we have to be at the front of this curve. We have to be on riding this wave. And you made an interesting point there about clients will still come to us, at least the right clients will, because we have to be. ChatGPT is amazing what it can do, but it also makes mistakes. And so it's critical as accounting professionals that we understand the things that it can't do well and the mistakes. And there is always a need to apply our own professional judgment to whatever comes out.
Yeah, I'm so glad you brought that up, because you're right. The AI does what's called hallucinate. The computer has to answer the question. And so what it does is when it cannot answer it as we would expect, it then makes up the answer. And we need to, as accounting professionals, be able to discern between that hallucination and what's truth before we actually pass it along to our clients. So we do need to do that scrubbing as you're describing it.
Absolutely. And there are some things where, as you get to understand it better, there are some things which it hallucinates, are more likely to hallucinate. And of course, the funny story, you may have seen this, Roger. It wasn't too long ago. I think it was in the US. There was a firm of lawyers, and the lawyer had a case to present in court. It was a case in the airline industry, and they delegated. Right. They were going away. They delegated to a member of their team. The member of the team decided to use ChatGPT to create all the court papers. The lawyer came back. Got this amazing report from their team member who'd used ChatGPT, was in court citing all of these legal cases in the airline industry, and the judge was saying things like, "I've never heard that case before. Can you explain what that is?" And almost all the legal cases that ChatGPT spat out were all made up. It was hallucination. And for anybody that understands hallucination and the weaknesses, it's fairly obvious that that's the sort of thing that it makes up. It makes up things like cases. It makes up things like, if you're doing research and wanting it to come up with research studies and papers and technical papers, you have to check Google first to check those papers do really exist, because it has a habit of making those things up.
Yeah, and the other thing is and depending on what system you're utilizing, some of it is drawing from data as far back as 2021 further, meaning there is this void of what it has access to today. And then the other part of that whole equation is, what are we willing to put into the public sphere of our client information? Do you really want to make public some private or proprietary information? And so we've got to be careful what we're feeding it, because once you feed it into the system, it uses that for its future analysis. And so you've got to be careful what proprietary information you're willing to divulge. So there's a lot of elements and components to this that are hugely important. So, Mark, here's what I want to do. We're drawing to the end here. We've had a phenomenal conversation about pricing, your experiences, and so forth starting out. I want to recap those. And before I recap them, I do want to highlight some things that I'd love my listeners to be aware of. Mark has provided here some great offers that you want to take advantage of. The first thing that Mark has made available is, if you'd like to, you can claim a free place to participate in his profitable bookkeeping bootcamp. So to do so, you just need to go to the episode description. And in the episode description, he'll have information there for you to leverage and take advantage of that. The second thing is that if you want to, you can get ahead of the curve with this whole AI GPT discussion, getting a ticket to his virtual summit that's actually going to be going on here shortly. You can go there to the episode description to find out how you can register for that and take advantage of that opportunity. And then lastly, he does have some free resources. He has a popular ebook that you are able to access. He definitely wants to connect with all of us on LinkedIn. So if you haven't done so already, definitely do so. But Mark, I'd like to summarize our call and come back to you for a closing thought. As a summary, I mentioned it. Obviously, you're starting. We talked about marketing, what that really consists of, and how to market effectively. Basically, trying to figure out who our ideal client is, to figure out what it is that they appreciate and value from our services, so that we can more clearly articulate that to our potential customers, what it is we do that matters so much. And then lastly, we need to also at the same time find out what is our unique selling proposition. Why us over the competition? What can we do to position ourselves as the expert and authority? That's all the things that I would definitely recommend. The second thing that we were able to talk about is pricing. I mentioned if you're not excited about doing the work, you're not charging enough, because you should be paid well for your time. And I felt he did a phenomenal job in explaining the value pricing as a way of leveraging your self-worth, which is essentially taking all of the experience, the education, the training, all the things that you've done up until this point that you're going to leverage in the client's behalf. We need to be paid for all that experience and expertise because of all the years we've put into becoming who we are today. And I think that was a phenomenal illustration. And the other part was that point of saying, even though you're doing the same amount of work for client A and client B, we need to value what the results are. And from that valuation of that same work for client A and client B, price our services accordingly based on the benefit or the outcome for each of them individually. And our prices, therefore, may differ for the same amount of work for each of those two clients. And so definitely a good explanation of value pricing, which I very much appreciated. I really value this conversation that is so timely about AI, the relevance of how it's going to be impacting our lives, what we should be knowing, the idea of leveraging prompts, being safe and understanding what hallucinations are. But lastly, just realizing we're not going away as an accounting profession. At the end of the day, the client still needs us to interpret the information, figure out what needs to be really done in the business, but more importantly, hold our clients accountable to actually do the things that we've identified need to be done. Because at the end of the day, you can, just like you hit the snooze button on your alarm clock, the business owner can actually turn a blind eye to all this great information they're getting from AI. We all do it. What we need is that coach, that advisor that can hold us accountable and make sure that we're implementing the things that we're being asked to do. So, Mark, wonderful discussion. What closing thought would you have for us today?
Oh, wow. So many things we could say. I guess one thing that springs to mind is that we have to recognize that it's not about winning every client, it's about the right clients. And most firms have too many clients. And so we have to have less clients. That might be by putting prices up. That might be by letting some go. We need to create space in our lives. We need to work less hard, partly because of work-life balance, but partly we need to spend more time thinking about our strategy, thinking about the opportunities out there. There are huge opportunities in the accounting profession, but if all we're doing is the same thing day in, day out, doing tax returns, doing bookkeeping, doing payroll, then nothing's going to change. And there's a very real danger that before we know it, technology will start to make us redundant. We have to be ahead of the curve. We have to see what's going on. And we have to adapt our practice to these exciting times and the opportunities it gives us.
I love it. This is a changing time. November 22, big day in history. I like that. So, Mark, thank you for being on the show. This has been a wonderful experience and truly met my expectations as to the conversation we've had. So I appreciate it. If you haven't already subscribed, I invite you to subscribe to the podcast. Definitely set your reminders to be notified each and every week when we come out with new and exciting episodes. Go back and binge listen to the previous episodes where we've had other experts on the show and we've addressed a variety of topics, many of which I'm sure will address your needs and what it is you need to be doing to work on your business. The other thing I want to do is encourage you to attend GrowCon. If you haven't already, register for GrowCon. It's an annual event for the owners of bookkeeping, accounting, and tax businesses. This is an annual event where we actually bring to the stage the various experts that we need to be listening to. We also visit as peers, basically learning from one another what it is we can be doing in our businesses, and most importantly, build relationships with one another so that we can collaborate and actually take care of our clients. And then, of course, you get to meet with Universal Accounting, the staff, and in my way of saying, be in business for yourself, but not by yourself with Universal. So join us at GrowCon and definitely register today for that experience. As for this conversation, check the episode description. There you'll find more information as to what it is you can be doing on your business, but also visit us at universalaccounting.com for additional free resources, many of which are available to assist you as you're working on your company. Lastly, if you'd like to apply these principles in your business and would like to learn more, feel free to reach out to us as well. You can call us at 801-265-3777 or you can visit us online at universalaccountingschool.com. And always remember this, if it's about accounting, it is universal. Take care and be safe out there. Bye-bye.